these are pretty much ones that, yeah, I've had lots of questions on, or that I've also found really interesting, and I think it's worth a look.
Okay, cool.
Mm.
All right, take us away on the FA, and then once you've had a spiel of that,
yep,
I will show everyone the shortcut.
All right, cheeky. All right, let's go with HLX first. So HLX, Helix. These guys are they're a fairly specky kind of play. They're a copper exploration play. They are in a really, really prominent region. Now you can see it here on the map. Their tenements are obviously outlined, but right around them, you have got a heap of deposits, a heap of mines that are operating. This is what we're looking for. When you start to look at the geology, what else is around there? Is there any success around it? These guys are in the right spot. So that's really interesting just to start with. They have got a very small market cap. You're looking at a $10 to $12 million market cap, which, while that adds the risk to it, absolutely, it also means there's significant leverage, from a fundamental point of view, to any potential discovery that, might come out of the exploration. 2.5 billion SOI, so shares on issue, a lot of shares on issue. One way to look at it is there's lots of liquidity. You can get in and out where you want to, hopefully. Also, it can maybe mean that it might be a bit harder for the price to move because there's lots of shares there to churn through. So where these guys are at right now, they are drilling their new copper targets. They've started drilling them pretty much in the middle of August. This is where they're going. They've got these three trends: Colorina, the Rochefort, and the Mararula. Right along the Colorina trend is the Triton copper deposit by AIS. They also have a joint venture with Aries as well. So a company that's already got a copper deposit, a copper mine, is in joint venture with these guys, and they've got a known deposit now with an MRE on their joint venture as well. What they've done, this company's been around for a bit, but what the new management did when they came on board, that was brand new, is they did ground and air geophysics. Now they actually went through, let's have a look, and they did the VTEM, which is the versatile time domain electromagnetics. They also looked for magnetic conductors as well, and they've also looked at the trends as well, and they're all lining up on top of each other, which is kind of what you want to see. See if I can find one for this. This is what you're looking for. When you're looking at geology and how a company explores, you want to see all the geophysics and all the aeromagnetics lining up on top of each other. So right here, you can see you've got the electromagnetic loops showing up in the whites. You've also got the red, which is the conductor plates. So that's really useful in certain areas where you're looking for copper. It's conducting electrodes. And you've got the electromagnetic anomalies with the yellow dots. So these are all lining up all the way along. You've got 4 different things telling you there's a really good potential target there. That's what you're looking for. This is putting more odds in our favor for a potential hit in the exploration play. Now, also the techniques they're using on the geophys, this is the same techniques that have been used to discover the majority of all of these large deposits and mines that are already in existence. So in this region, it has been shown over time that these techniques have the highest chance of giving you the best targets for a potential deposit. That's why this is so interesting. This company also, look, they've got a nickel and cobalt resource that already exists. The market's really not giving any value to that. The company is actually spinning that out into a new IPO as well. And also they have got about 6 million, 5.5 million in cash, sitting there to drill. If they find more, they can just keep drilling and keep drilling. So it gives them about 3 to 4 quarters of funding left. So there's plenty of money in the kitty. Well, that's a pretty good overview of those guys. I'll drop this off and we can have a look at what the chart's showing us.
All right, thanks, buddy. So first thing I like to do is I like to zoom out. All right. So first thing I like to look at is the monthly. And the reason why you look at the monthly is you can see the big picture, and you can see that, this has not been a very good long-term investment for the last 30 years. Since 1990, it's done nothing but sideways to down. All right. But lately it's lower, low, lower, high, lower, low, lower, high. That's the next thing I thought is market structure. Okay. And we have a series of, you can see you're looking for these highs and see how they keep going lower. and also these bottoms keep going lower as well. However, lately, zoom in a little bit more here, you can see how they're going lower, 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 and then now we have equal high, equal low, equal low. So for whatever reason, someone is seeing this kind of 0.005 cent as a bit of a supplies demand zone. Someone sees it as value around there for whatever reason. So this is where it's going from a downtrend to a possible sideways trend, which could be a form of accumulation. Okay, we don't know. You won't know until it kind of starts to move out. But once I kind of see that the downtrend is ending and it's moving into a flat, I then look for were there any signs of weakness going into that downtrend prior to that as well. Okay, that's kind of my whole style of how I learned how to pick reversals and things like that. You probably saw my post about EML today, and I got in at 42 cents, and now it's up at like $1.30 or something. And that was literally just tracking the downtrend and seeing the downtrend weakening, and then looking for that point in moment where the volume and that's starting to step in. So here we've got equal lows all of a sudden. And then from there, you can see that for whatever reason, a whole bunch of volume stepped in here. Craig, did something happen there? Did some announcement come out or something?
Yeah, so when they first did some exploration on I think it's the Canbalago deposit, the joint venture they've got with AIS,
okay.
They hit a beautiful drill hole, and they didn't even wait for the assay results. They just released literally the actual visual of the drill hole, and the visual was fantastic, and that's what took that up. And I guess that's the example of a leverage to a small market cap, but being in a region, which has got fantastic geology, for these type of deposits, and using the techniques they have. So that was a visual core of the actual, deposit they've already got and started forming up there.
Yeah. Okay. Yeah. So I put that green box there because again, it's just kind of like a visual representation to show green for kind of buyers are stepping in. Red I do for kind of like sellers should step in. But yeah, for whatever reason, a lot of buying pressure came in there, but then it's retraced the whole move. But the good thing I can see is that it has come down on kind of lowish volume, and now it's pulling in bullish divergence. Okay. Because you've got a equal low in price, but a higher low in OBV. On top of that, you've also got bullish divergence on your RSI. So the price momentum. So on the monthly, I can see that this little move down is a weakening trend, which is what I was talking about. Okay. So that already is catching my eye. So then I'm like, okay, let's dig deeper. So now I'll go into the weekly and start to see. All right. And then you can see again, support by stepping in. Can you see the volume? And can you see now how this volume has been going sideways? Whereas this has been going down. That's what's called divergence. Divergence is where the price and the indicator are not doing the same thing. Okay, so this is going down and it's come back down to that low, but the volume hasn't, which shows that this is going down. What it's showing you is that there's more volume on the green candles than there is on the red candles, which is showing that it's going down and lower in volume, which again is a sign of a correction. On top of that as well is bullish divergence coming off this double bottom here as well. All right. These are all what I call a signal. The way I like to think about it is you've got to think about if you're at home, you're upstairs in your bedroom, and all of a sudden you hear a loud noise downstairs in the kitchen. You hear saying, you're like, oh shit, someone in my house. But you don't then pick up the phone and call the police, be like, there's someone in my house, I'm being broken into. You're like, all of a sudden you're alert, there's a signal, but you want more evidence. Okay. So all this does is it's got my attention, but I need to seek more evidence to know whether or not something else is about to happen. So then that's the weekly. Going down to the daily. Again, this is how big's the market cap in this thing? It doesn't look very big.
No, mate, it's kind of 10 to 12 million, depending on the
I was going to say
share price.
Liquidity is quite low.
Yeah, that's right.
So yeah, liquidity is quite low. It's gapped up there. What I can see there is that's an ABC. It's moved up on 3 waves, but now we're coming down. Is this the final leg? We're not sure, what I'm looking for now is if that's a double bottom, it needs to get back above that neckline. All right, back above there. Because then if we get above that neckline, you've got a double bottom and then you want it to stay above that neckline. Problem is that's at 1 cent. We're at 6 cents. It's nearly double from here. And this is the thing about penny stocks. It's hard to get a really good risk to reward because at the end of the day, let's say right now, where's your stop loss going to be? Down here at 3 cents, which is a 50% loss. Whereas the entry is up here, it doubles. So, you know, that's the thing. It's really hard to get a really good entry on these really low liquidity stops. But yeah, ultimately what I'm looking for now is it to get above that resistance, which would be that neckline of that double bottom. You can see lower in volume, bullish divergence, possible trend of reversal, that kind of thing. So yeah, it's got some signals, Craig, like I can see a bit of life in it, but I need more data really to know whether or not that's buying momentum is going to continue and we're going to see some life there. But it's definitely one that I'll be keeping an eye on. Just so you guys know, I personally don't hold any of these. I don't own a single dollar in any one of these stocks we're mentioning today. Yeah, so all mine is total just unbiased TA perspective from what Craig's going.
Yeah, and look, for me, it's all about what's really interesting at the moment. And HLX is the only one I hold any shares in.
Okay, yep.
And this is, you know, what I often get asked about, how would you pick, or what do you look for in a really speculative exploration stock? And these are the things that you would look for. This is what you are looking for in terms of the geology, of all the players around it, of cash in the bank, of leverage on a market cap, on, you know, using the right geophys techniques that actually back up what's already happened in the region. And so you're just repeating a process that's already happened so many times before to get, you know, all those millions of ounces that already existed. So these guys are repeating a process that's already well known to put as many odds in their favor as they possibly can. So that's why this one. So and look, Mark Creasy holds 2-3% in this company as well. And,
okay. Yep.
Obviously, you know, we know this guy has taken himself to a self-made billionaire by picking and holding, you know, resource stocks that have incredible prospectivity and often turn themselves into a company that makes good discoveries.
Okay. I often get asked like, well, you know, if these pennies have such fluctuations, how do you, I guess, get these positions and stuff like that? And you've got to remember, you wouldn't put the same amount of money in something like this as you would something like CSL. You know what I mean? Like CSL is a multi-billion dollar company that's only going to fluctuate a couple of percent per day. So, you know, you can have a stop loss a few percent below. Something like this could fluctuate 20-30% in a day. So what I personally do with things like this is I put in pretty much what I'm willing to lose, which would kind of be a stop loss. You know what I mean? So let's say I've got 100 grand account and, you know, I'm never willing to risk more than say 1 or 2% per trade. That means I'm never willing to lose more than 1 or 2 grand. So that means for something like this, you only put in a couple of grand, because then if it's wrong, you've lost 1 or 2%. It's the same as getting a stop loss hit on a thing. You know what I mean? So that's kind of how I play this kind of end of town when it's really minute like that, because it's like when I can see kind of a good entry, I kind of put an amount on there that it's an amount that I'm willing to lose kind of thing, you know?
And that's it. I think if you're going to play in this end of town, you know, early exploration, the reality of early exploration is that the majority of exploration actually fails in the resource sector. And the majority of holes actually miss, or the majority of holes encounter mineralization that actually will never, ever become something that you can mine. It's just the reality of it. So you do have to be aware of what you're actually playing. You know, a lot of retail investors, traders end up in these companies because of the excitement in it and the idea that, you know, if it goes up a couple of pips, you can double your money and that kind of thing. But I think you have to really understand the risk that comes with it, and just the fact that you are sitting in a space that is unknown until it's proven otherwise. And the only way to prove it is to drill those holes. And yeah, the majority of exploration actually fails. So that's why we're looking for these markers to try and put more odds in your favor. But it's exactly like you were saying. It's the risky end of town. And so you need to, you know, play it accordingly and, you know, just be safe with the money you're trading.
Yeah, beauty. All right. Take us on to the next one, bud. You got to share your screen.
Absolutely. I don't have much to show. There's not much to show on this one because it's a little bit more. So I can jump out of that. Move that over. Where is it? There it is. So this one, let's look at MAD, M-A-D, the MAD group. There's not much to show on my screen because this is, I guess, more about the financial. So if you want to jump straight on the chart, that's all good.
Yep.
So MAD group, look, these guys, they're a global service provider. They do specialist technical services. So they have like field techs, they got service vehicles, they do infrastructure support. They are in the power, the heavy machinery, the energy, marine, transport sectors, and they really operate out of Australia and now in North America. Now, these guys are founder-led and they have an absolute dynamite management team. But one thing we do look for in the fundamentals of companies is a founder-led company. Just research year after year, decade after decade show that founder-led companies have a significantly more higher percentage of winning for shareholders because of the alignment that that founder has with the shareholders and with the management team. So it's kind of like, once again, adding another nod into your favor by finding one of these companies.
Yeah, okay.
So these guys, they've been on a bit of a run. They've had like ongoing quarter-on-quarter growth in revenue, just consistently. So like Q4 23 was 172 million. Revenue was a record, 46% up on the period before that, 11% up quarter-on-quarter. And they just released their actual full year revenue. And you're looking at 608 million, which is a year-on-year growth of 51%. And their NPAT was 38.5, so net profit after tax. And so then you're looking at, what's that? They beat guidance by kind of 1 or 2 million, up 48% on last year. So you've really got a company that is performing. They're growing in their markets. Their EPS is up by 38%. And one thing I really like, and we absolutely should always look at, is the EBITDA margin percentage. So that's how a company converts their revenue, the percentage they get of that into profit. And they've actually grown that over the past 6 months by another percent. So that means that the more revenue they earn, they're going to turn even more of that into profit each time, which is, absolutely what we want to find out. And look, man, the other big marker that I was really happy to find is that they're paying down their debt consistently. And even within that, they put down 8 million in the last 6 months alone. So, that's absolutely huge for a company that's still actually focusing on growth. They're still getting their net profit. They're still paying down their debt, and they are, bettering the EBITDA margin percentage. Just quarter on quarter, year on year, just continually doing that. And we've seen it in companies like DVP, that these guys have a massive focus on their ethos that employees actually come first. And when I went back and I had a look at some of their data for employees and shortages and all that kind of stuff, these guys really didn't struggle in the skill shortages and in the COVID times because they managed to retain, a skilled workforce and attract people while everybody else was struggling. So I think that's a pretty good marker of a solid business, of a good management team, and actually looking after your people, which for me is incredibly important. And we know we've had a good run on the chart, and I guess the question that I've been asked a few times by a few people is, how much more do we have to go? Obviously, they are still beating their guidance. They're still growing their revenue, still growing their net profits. Where do they go next on the chart? Their fundamentals are looking good, but it's, they're kind of getting probably to the top end of their value, really.
Yeah, like these are the kind of things you want. Left, the old left to right charts. They're just ones that are going off like that. It's perfect. It's one of those ones where if you're on it, you just let it do its thing. But there's, the entries have gone. It's gone into that parabolic stage now, where eventually this is going to not pop, but like get to an end where you'll then get a retrace. So if any entry from now would be a FOMO entry, like it's 10x since COVID low.
And I think when I looked at this chart last, things like the OBV and stuff were, not quite supporting the continued move.
It's still kind of looking all right. Yeah, like it's still, look at that, still increasing buy pressure. You know, you're starting to get a bit oversold, overbought, sorry, now, but again, that doesn't mean too much, to be honest. But it hasn't actually finished a whole, like there is, what it's going to do, it's going to come up, it's going to then have some kind of blow off. Then you'll get a retrace. And this is what stems from Dow theory, is that the primary trend is up. That's all we need to know. But for every primary trend, you're going to have a secondary reaction. Those secondary reactions, Dow theory always said, they would correct 1/3 to 2/3 of the move. So let's just pretend that this is the top right now. So all that means is that this is all one move. And then you just get your Fibonacci from the bottom there to your top. And it means that you're going to come down to this zone, this 382,618 zone. Okay. That's what he talked about. For every primary trend move, you get a secondary reaction that pops back down to here. If it's a strong trend, they'll pick it up at the 382. If it's a weaker trend, it'll start to come down. And again, that's just, you know, like, I guess, buyer logic. If you think about it, if people are willing to step in here, they're willing to step in at a 38% discount. If they're not willing to step in until here, it means they're waiting for a 60% discount. So it's, you know, they still believe it's overvalued. So what you'd be looking for is when it does come down, you look to see, is it going to buy up straight away around this top part or bottom part? And then you start looking for some kind of reversal pattern, you know, like a double bottom, a head and shoulders, whatever it is, around that zone. So yeah, that's what I often do. If I'm like, I love the fundamentals, but my TA is not giving me an entry, you do not FOMO. There is always a pullback. Okay. Eventually.
Yeah.
Sometimes they go to the moon first, but then they come back. And if you look at things like, you know, CXO, LKE, I guarantee a lot of people thought that those things were never going to pull back, and they always do. Everything always pulls back. So yeah, there's no, you know, if you're on it, awesome. Keep riding that trend, but eventually it will top out, and then you look for that 1/3 to 2/3 retrace. So yeah, no, she's a beauty, and TA aligns with the FA of it. So yeah, it's looking good.
Yeah, the FA just
next one.
Just keeps going. Like they just keep somehow, you know, pulling it out and keep growing and just keep finding ways to improve this business. It's amazing. So I think it's one to watch, because when there's a pullback, just to see where the market brings it to, and where they want to value it, as everyone takes some steam out of it. Yeah,
exactly. Because equities will always go far higher than you think, and also far lower than you think as well.
Yeah,
you know, and that's what you've got to wait for. I saw someone put in the thing, a mean reversion. That's it. All right. So things will always go a bit too hot because hot money comes in, or some dumb money, you know, because they just ride the trend, and then exactly. But it doesn't mean things start pulling back. Doesn't mean it's a bad company. It just means that everything goes in cycles. That's it.
Yep. Absolutely. And you see that in those, you know, in all your developer stocks and your exploration stocks and stuff like that. It's obviously everywhere, and you look in every single one of those companies, you see the big up, and you see the come back down almost to the beginning of that run. That's how it goes.
Poco knows the manager and could have got in. We've all got stories like that. Trust me, I know. Yeah, I've so many times the what if stories. Trust me, they'll eat you alive. Don't worry about it. They will eat you alive. Trust me.
Oh yes.
Like mine was, I had 4 million Doge, and I thought, you know what, this cycle, people will learn from last cycle. They're not going to be as dumb. They're going to chase the quality this time.
Yeah.
They were dumber than the last cycle. I couldn't believe it. Like meme coins popping off left, right, and center. I couldn't believe it. So I swapped all my Doge for Ethereum. You know, Ethereum still did a 10x, so I can't complain. But Doge did put it this way, it wasn't $4 million.
No, I did with LKE. I sold early because I thought, the fundamentals are, like, you know, have gone no good. The market's well outstripped the fundamentals of this company, and so I bailed out. I still was happy with it in the end, but yeah, there was plenty more to go on that run, because people just, for some, you know, kept piling in. And I was like, no, this won't keep. No way. And
no, we've all got them. It's part of the game.
Yeah,
part of the game.
Right back down.
All right, shit, it's the next one.
All right, let's go with Hastings, HAS, and I am sure a lot of people are aware of Hastings. I can find something to throw up on the screen on this one, but if you want to jump on the chart straight away, if I can quickly bring up one of the changes in their plan, I will. So Hastings, so these Hastings Technology Metals, these are the rare earths. These are going to be the next rare earth producer in Australia. That's kind of their claim to fame. That's why they're interesting. You know, there's always tons of focus on ARU, and you know, obviously a huge project. Gina Reinhardt, you know, made it pretty famous, pretty exciting when she started getting involved. But Hastings is going to be next, and you know, they've copped an absolute flogging of late, and they are still progressing ahead with their project. Now, these guys have stuck to their plans and they have followed their plans. They have continued forward, you know, kind of no matter, you know, kind of what's happened. They have had a solid management team that have kind of kept, I guess, delivering their plan. And what's gone on recently for them, why, you know, we're seeing that big pullback, is if we know the rare earth space, we know that rare earth projects take a long time. They take a long time to learn the metallurgical test work because there's so many elements involved, and what are you trying to pull out? How are you going to do it? Also, to build these plants, all this stuff takes a long time as well. And so you're going to see it with any rare earth project. Hastings are a great example, ARU as well, and ARU will probably suffer it again, is the CapEx overrun. So these guys got absolutely slammed when their CapEx essentially doubled from kind of 400 mil to about 800, absolutely massive. So that's been a huge problem for them. The thing I guess we want to look at though is how did management actually respond to that? Now, management, you know, they flagged that they were going to review it. And so we knew it was coming. And when they came out to say that this is what's happening, they didn't just come out and leave it. They came out with a plan straight away, which is fantastic. That's what we want to see when we're looking at the fundamentals. We want to see a management that is responsive and on top of it. So it was a swift response, it was solid, and they redesigned their process. So now they have got a staged development process instead of just, you know, going for the end result. They're going to go for the concentrate. They're going to bring that online first. And that's got an NPV post-tax of about 530 million. The IRR, which is the internal rate of return percentage, is 27.5. Payback of debt, 4.5 years. That's not too bad. The second stage, though, is where it gets really interesting for these guys. That's when you get into the mixed rare earth concentrate side of things. That's where you're getting your big margins on a product. Now, that's going to put things up once they get there to, you know, $1 billion net present value after tax, and you get your IRR of over 50%. So, you know, they are fantastic numbers when we start to look at, you know, your DFS numbers and the metrics of this company. Also, these guys took I think it was a 20% stake in a magnet company and in Canada. And so their offtake is going to go there, but also what that gives them the chance to do is potentially toll treat their concentrate and turn that into the mixed rare earth carbonate early before they've even built that part of their plant. If they do that, they bring forward a heck of a lot of revenue really fast. Now, these guys also have NAIF and EFA on board as lenders, the big government bodies that help, you know, critically important, you know, projects, you know, get up and going. So that's, you know, that's kind of something that you're looking for. You have got a mine developer here that is totally all permitted. They're at the low end of the cost curve for their production. Also, we do like to talk about ARU, and ARU always talk about obviously being a neodymium and praseodymium REE producer. They are the two components of your magnets that you need for your wind turbines and for your EVs. These guys have it as 37% of their basket, which is actually a higher percentage of their basket than ARU. So that's, you know, that's a better return on these two components that are valued so highly. These guys have more of it than ARU does in their percentage of their basket. So that's something we're looking at as well. These guys do have further funding to be finalized, which I'm sure the market is, you know, waiting on, and that's probably not helping things at the moment for them. Most of that I would say will come from debt, but there's going to have to be an equity component at some point. we don't know if that's going to be open to retail traders and investors or not, or if that's going to go straight to institutions, sophisticated investors, that kind of thing. And also, the risk that sits there right now is that still that construction risk, and then you've got your ramp up risk. So as we know, developers, as they move into production, they have to turn everything on. They have to make sure it all works, make sure everything is recovered the way it should be, to the percentages it should be. That takes time, and things break. They don't work to specifications, so you've got to ramp up. And so that's something to look at as well, and a risk to keep in mind with these guys as they get towards production. And they reckon they're going to have their first concentrate out in Q1 2025. So
yeah, beauty.
They are the next rare earth producer. You're looking at an NPV of 500 mil to $1 billion. Their market cap right now must be about 120 million or something like that. So they've been absolutely smashed down with that capex overrun, and REE prices at the moment are not doing too well either.
Well, yeah, this is why it's so important to match your FA with your TA, because to me, this thing is showing nothing but weakness. I wouldn't even, there's nothing about this thing I like at all. Looking at the big picture, we're down towards the support level. The thing that catches my eye straight away is the opposite to last time. Remember how last time I showed you it's coming down low volume? Look at what it's doing this time. Massive sell pressure. That's showing that these red candles are having more volume than these green candles. So it's showing that people are exiting. People are exiting. Like you can see it monthly there. You can see it weekly. Again, look at the sell pressure, massive sell pressure. There's nothing but lower low, lower highs, and and on strong volume. And this is part of Dow theory. Dow theory, probably heard of the Dow Jones Industrial Average, named after Charles Dow. He invented Dow theory. He invented technical analysis. He had principles. One of his principles was that volume must confirm the trend, whether that trend is going up or it's going down. OBV is a very straightforward, simple tool to help you identify that. What you always want is OBV to be matching the price action. So you can see here, can you see how it's matching it here? And then see how this price is going higher, but what's this volume doing? Going lower. So that was showing you volume wasn't confirming that move. It then reversed. Then you had a lower low, lower high, lower low. What came in? Sell pressure, sell pressure, sell pressure. And all of a sudden dumped that. So right now that is in a strong downtrend, which means I'm not even looking at it, to be honest, from that one. And then even looking at the daily, same kind of thing. Just massive, look at that sell pressure, massive sell pressure. All right, I'll give you an example of one.
Can I ask a question?
Yep, sure can.
So first off, thanks for taking this call, guys. You were saying about the importance of fundamental analysis. How do you find out about different projects that these companies are doing, and what's your go-to source for that, or is it just experience?
Yeah, there's a few ways you can do it. It depends, and I think this is something that we both do. Is we like to look at what's the big overall picture of the market at the moment, or what sectors or what things might be, with more chance of having a bullish trend or a bullish outlook compared to a bearish outlook. And you might start there. And so you could start with, okay, copper may have a very bullish thematic, for the next however long. Uranium might have that. Something like, another commodity might have a more bearish outlook or something like that. Maybe some people think that coal does, or oil, or whatever. Other people might think the other way. And so you could start there and bring in the companies, kind of that way. There are some lists that you can find if you're able to identify on the stages. And we go through this in some of the FA training, is looking at the stages of your resource companies. You can identify where you like to be. If you like to be in developers, near-term developers, or explorers, you can look for people in those cycles as well to find out where they are. That's a way. There's plenty of lists on YouTube and things like that as well. That will have those there. They're really good starting points. Obviously, you've got a few, websites and things like that will put out, news stories, some sponsored, some not, and they will talk about companies that are doing certain things as well. But look, once you've been looking around for a little bit, Evan, you'll kind of, pick up some big names, or some names that maybe seem to have a better name out there and better fundamentals, and you'll have them on your list, mate, to go back to. Yeah.
No worries. Thanks again, guys. Cheers.
So looking at Zip here, couple of key things. Okay. And this is one of the ways I was able to know that above $10 was a major top on Zip as well. Again, high, low, high, low, high. See that vertical run up? That is a typical wave 5 as well. On top of that, like I said, Dow theory, volume must confirm the trend. So going off that, can you see how price made a new high, volume made a new low? Volume did not confirm that last move. Then on top of that, what I want to show you now is when it then broke this major support here. So resistance became support, this major level here. We then went into a massive downtrend. I want to show you the volume, the sell pressure that stepped in when it broke that major support as well. So that's here. Can you see how volume's kind of steady? And then the minute we broke that major support, look at the sell pressure. See how big money's exiting? They're like, shit, we've changed market structure, I'm out. Big money exits. We go from $5 to 30 cents. You can see the sell pressure. Volume is confirming the trend for down. Okay, that's what I'm talking about with that last one. It's right now, it's still confirming the downtrend. So until it doesn't, it's just not anything that I go back. All right. So you mentioned ARU before. Same thing. This is one that I actually like the fundamentals of as well. But I had a mate contact me about this the other day because he did my technical analysis course a number of years ago. And this was one that we identified on the breakout back here when it broke out on this 13 cent zone back here. High, low, high, low, high, low, high. See this vertical pump? Again, what has it happened on? Lower in volume. Okay, this is your retail wave. This is your dumb money. This is the end of that one cycle. Okay, on top of that, also bearish divergence on your price momentum as well. So that's showing that's your wave 5 top. So what it then means is this whole move gets retraced. And that's what it's doing right now. Okay, so that's why, it doesn't mean that the fundamentals are terrible on the stock now. It just means that, it went from 2 cents, 3 cents to 68 cents. That's a 20, 30x in a number of years. That's a pretty good amount of gains. It got too hot, it's going to pull back. And also, you'll notice with miners, and Craig talks about this in his fundamental course and stuff like that, that they all run in cycles and things like that as well, depending on what stage they are around their development as well. So that's just an example of, why, I've been pointing out that volume and why it's so important and stuff like that as well. All right, catch us on.
I think that's the reason why we talk about putting your FA and TA together. Because the fundamentals of these companies are excellent, and that's why you have them on your watch list. And then you're using your TA to confirm what the volume's doing, and where are we sitting for potential entry and exit points, and your support and your resistance. And so then when you find that point where the TA and the fundamentals are matching up, you've got so much more power behind any potential move that comes from that as well. That's why we put it all there.
Yeah, beauty. What's the next one?
Can you jump on the DRE chart for me as well, please?
Yeah, DRE.
Yeah, DRE. This is an example of that as well. So you got that, that base in there in that 4 cent mark, where they were, really, starting to put in their plans for their drilling for their rare earths, and then had that massive move, and then obviously we've got the big kind of come back down as well, and you can see their massive price high. Yeah, the BBs were the same for 2 different price levels as well.
See here how price made a significant high, double top, and then lower low, lower high. What happened? Sell pressure.
Yeah.
All right. So it's brought it back down. So, you can see the importance of these kind of things.
Yeah. And this is what we call it's early explorers in particular, but the developers move in the same pattern. It's the table without legs. There's nothing to hold it up. With the explorers, it is that fast money, that excited money that comes in, and then you get the retail wave usually afterwards as well. That pushes you into that last kind of high. And then there's nothing to hold it up. There's, not a big resource, not a big ore reserve. There's no income. There's nothing like that. So it's a table without a leg, and you can see it's got to create the other leg, so it falls back down to hold itself back up again. And that's where we get that. And then it's going to start again, start its base until it's got another reason to move up, where they can delineate a massive resource or start moving into development. All right, man.
All right, what's next?
Let's go with IPG. Get my little thing up. Yeah, you can chuck that one up if you want. This one's more on the whole electrification tailwind, and just the same thing, some financials that have gone really well. I've had a few people send me this one over the last month, just with their financials that were due to come out. What's the chart looking like, all that kind of stuff. Look, these guys, they're a vertically integrated electrical supplier, and they're also a servicer. So they're supplying wholesalers for the electricity grids, solar in the home, solar in business. They're doing battery storage, wind and solar for the grid, as well as the massive data centers that we're starting to see. Obviously, there's more and more of those coming online as well. They do engineering design, they do assembly, compliance, just heaps of stuff that all centers around the electrification of everything. And so this is across all industries as well. So they've got their finger in everything. And now, look, their half-year figures for 2023, same thing as we talked about with MAD. You got your revenue was up 35%, NPAT was up 33%, your earnings per share 34% up. Just all really, really good stuff. And their financials, for the end of 2023, you've got everything just going up. I might actually flick this screen over just to save me talking it through so people can see it, if you don't mind. Where are we? Real quick. Let's go to that. So you can see here the improvements these guys have had across the board, absolutely everywhere. And one that's even nice to see is the operating expenses as a percentage of revenue has come down. So that's always a good thing to see. You've got your revenue up, your gross profit up, net profit after tax, gross profit margins flat. That's okay. We'd like to see that change, but that's okay. Net profit after tax margin is up a little bit as well. So financials all heading in the right direction. Obviously, the chart's been going in that left to right up moment. I guess are we getting to the overvalued stage? We possibly are from the fundamental point of view. But yeah, people have been sending me that chart for the last month, which is why I thought I'd bring it and see what you reckon as well.
Yeah, beauty. All right. So again, this is similar to that. What was that other one that was left to right? Matter. Yeah. So again, beautiful chart. All right. These little humps I'm doing. This is what you are getting.
You got to drop your screen on there.
That'll help. There we go. So see how I've done these little dump, bump, 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 and then these lows keep going higher. There should be one there as well. But that's what you look for to know an uptrend, because you just got to picture it like a man literally climbing a mountain. Like you can literally see a man stepping up the mountain, stepping up the mountain, stepping up the mountain. All right. And that's what these are. It's just climbing up steps. What we now need to look is see how we've got a low here. If this rolls over here and breaks below that low, you then have a change of market structure for the first time since there. So that's why that level right there at $4 is significant. Okay. So that to me is my key level. So it is in an uptrend until it breaks below that zone. So now I go, oh, okay, well, if it breaks below there, let's dive deeper and see, is it potentially possibly going to do there? Are there any signals on this that's showing that maybe this will happen? All right. So that's when then I start diving in on the trends. And again, volume, what am I seeing straight away? All right. From that move to that move, lowering volume, sell pressure. So from that, and then also bearish divergence from that point to that point, that point to that point, weakening trend. So me personally, my money would be on that low is going to break and we're going to change market structure. So this is where it's really important. If, you know, if you're an investor and you got these kind of things and you're on these kind of significant gains like this, you need to know, where does market structure change? And then when it does change, were there any signs prior to that showing that the trend was weakening? And then if it doesn't mean you sell out of your whole position or things like that. It just might mean, you know, look at my position. Do I potentially want to take some profit here or not? You know, things like that. So, you know, that's why TA can be powerful, because sometimes you can be on these ones that are FA good, but remember, for every push, you're going to get a 1/3 to 2/3 correction. You know, if that goes from $4 down to $2, you've lost 50% of your money. So, you know, that's why knowing these kind of things and knowing when these trends change can be powerful to know when to lock these kind of things in as well. So yeah, me personally, I reckon you'll get a lower low, lower high, and we're going to begin the pullback of this move here. What do they do? Are they, what's the commodity that they do?
So they're electric people essentially. So they're going to do all supplies for your grids, your solar, your storage in the batteries, your wind and solar farms.
Yeah. Yeah.
So
So
all the design as
renewable
well. So,
energy stuff. Yeah.
And so they're, you know, I guess anything that's probably going to be built, these guys are going to have some part in it. But I think and these guys have a great div payout ratio as well. I think why I think this one's really interesting, because at first, you know, glance, we're seeing some really good financials pop up in that you know, full year for 2023. But what I was looking at when I saw this, I was like, well, our gross profit margin hasn't really changed, and I'd like to still see the operating expenses as a percentage come back down. I would like to see that a bit better as well. And so that was my first thought, is I think we're actually going to see a change in trend based on some of that fundamental stuff. And then also, as I was watching the OBV change as well, I think that those two things, for me, I was like, yeah, that would be a change in trend. I would think is potential to happen here, because we're not, I don't think, quite seeing the fundamentals come through that holds this company on the valuation it's sitting at right now.
Yeah, and that's it, because it doesn't mean it's not fundamentally a good stock. Because you got to remember, this thing was $1.
Yeah,
it got up to $5. It's 5x. And you know, you got to remember the normal return on the stock market is 7-8%. So if something does 500%, it's very, very outperformed the thing. So again, everything runs in cycles. It could just have a pullback and then it goes on its next leg again. But yeah, that level there is your key level right there, because if we break that, we then go a lower low, lower high, we change market structure. And also on top of that, I have my signals of weak, lower in volume, sell pressure, divergence, that kind of stuff. So yeah, easy as that.
Yep, that's it. All right, let's go. We'll go last one. WWI.
WWI.
Yeah, I'll just quickly jump this one up on my screen so people can see what I'm talking about. And
World War
I.
3.
All right, that one. All right, so WWI. Let's see. So I guess I think this has been coming up because these guys are a gold developer in South Africa. They are right on the outskirts of Joburg, so they're not in the middle of nowhere. They are right next to Johannesburg, so access to absolutely everything. Obviously, plus a skilled workforce right there. You know, a fantastic location. These guys have been around for a while. I'm sure plenty of people have been in and out of this company as that's been trying to get going for ages. And right now they are at a point where they need about 60 million, US dollars or so to actually get mining and get underway. The difference about these guys compared to many other near-term developers, near-term producers, is that they are not building a mill concentration plant or anything like that. They are going to toll mill everything. So they've got everything kind of built. The funding is literally get in there and start mining, get underground, do the stoping, pull all the ore out, get it on the ROM pad, and then start shipping it off to get it toll milled and then sold. So they're a super interesting point fundamentally, because they're sitting in a space where they are trying to lock in the last bit of finance. the difference with what they need as their finance to many others is they don't need that 60 million in one big hit. They can actually stage that out over a year or two. So they're actually looking at the moment of potential finance with the Industrial Development Corp of South Africa. They're on their final round of due diligence with these guys. If they go ahead, it's going to be about $15-16 million of US debt funding. Now, the IDC, they have a history of lending to quality projects in South Africa and doing some really significant due diligence on these companies. They don't just give money to anybody. So that would be a big vote of confidence for WWI if this actually went ahead. Once they get that money, if they do, they can pretty much go in and start making a go of this mine. They don't have to wait for the rest. They can still obviously keep doing all their financing, but they don't have to wait. So that's a bonus for these guys compared to many others. They have a very new DFS, definitive feasibility study, from the end of July, which actually enhances the metrics of this project. If we're seeing numbers like this, you can see them on your screen. Your post-tax IRR 53%. Your NPVs 255 million, payback 4 years. You've got your all-in sustaining cost of $977 an ounce. These are metrics that any company would be very excited to pull out of a DFS for their project. So this is kind of stuff we're looking for when we are looking for what's a company going to come up with. Now, I think the thing to keep in mind with these guys, and one of the biggest challenges, and I'm not quite sure why it exists, is their mining plan for the first couple of years. And this is always worth looking at when you guys are looking at someone who's going to, wants to move from developer into production. Look into their PFS, their DFS, and check out their mining schedule and see how they're going to do it. These guys are not ramping up any production facilities. They're going in, digging their stopes, removing the ore, and then sending it off somewhere else. Yet their mine plan of production is really, really slow. It's going to take them 3 years or so to start getting into their actual annual production target, which is around about 70,000 ounces. I'm not sure why it's going to take so long. I've had a bit of a look at the mine design. I can see the reefs that they're going to go into, and there is, some maneuvering they're going to have to do. That's how reefs work. But it's a long time to get up to actual annualized life of mine production. Now, that's a risky component. You've also got, your general ramp up issues of mining. Is a mining contractor going to get it right? And you've also got, I guess, just there's always going to be risk, and there's always going to be the challenge that underground gold mines have. Underground gold mines always have the issue of you may hit dead spots. They are one of the hardest commodities to drill out in the underground, particularly veiny resources, and some reefs as well can be quite difficult for the company to do. So that's something to keep in mind with these guys as well. That said, they are giving guidance that once they start mining in 6 months, they believe that they will be cash flow positive from the first gold pour. So they mine, they do their gold pour 4 or 5 months, and then after that gold pour, 6 months after that, they're cash flow positive, which would be about a year or so. So that's what they think. There's lots of risk in that part, but this is also a company that could potentially have the backing of a very reputable debt funder. They are set for near-term production. If they pull off those metrics in the DFS, particularly AISC, that all-in sustaining cost, that means that they will have, in theory, a very decent cash flow coming through. So that's why those guys are interesting. That's why people have been sending me that one, I think. But there's still that balance of your risk that you've got there with the near-term producer. So one, we're in an interesting space, I think. And the chart, I think, is kind of trying to get ready for what's happening, but it's still not sure. And I think the debt funding is holding that back as well.
Yeah, let's have a look. So it's been in a sideways trend. It had a bit of a pump, but then has retraced the move. So what I want to see is, has this move been coming down in lower in volume? Is it looking corrective, or has it been coming down in sell pressure for it to be, looking for new lows kind of thing? So, because if it is coming down low volume, kind of see that it's there and coming up here, then what this could be is, yes, one big accumulation base here. Because what you've got is you can see this resistance became this resistance. So then this whole thing just could become one big accumulation range. And that's, they're the kind of things I look for. Again, Dow theory, market moves in 3 phases. You have downtrends, accumulation ranges, uptrends. And, a perfect example of that is looking at even, this was the #1 stock in the world on the year 2000. Okay. Largest market cap in the world. Okay. It had a massive uptrend. Massive uptrend. What did it go from? It went from, 6 cents to $60. So 100x. Well, more, 1,000x. I don't know. Not that good at math. So, and then from there, what did it do? It ran really hot, really quick. It then went down and then went into a sideways move. Okay. Sideways move for 14 years. Right? A lot of people don't realize that Microsoft, if you brought Microsoft at the bottom, tech bottom, your money did nothing for 15 years. It was actually the worst buy possible. The best buy possible was there, or on the first high low out. Okay. That is what you look for. You look for, you're not big money. All right. You're not a billionaire. You don't need to be buying little amounts and secretly buying shit during the accumulation range. What you want to be is, this is the one benefit that we have being a retailer. Okay. We want to know when smart money has filled their bags, and we jump on the minute that it's about to break up. And that is the minute it moves from the accumulation bank range to the uptrend. Okay. You want to be the first one that once it breaks out of that big base and it breaks up, because that's the kind of stuff you get. All right. If you look at Bitcoin, that accumulation range from 2018 to 2020, sideways range. Then when it broke up, boom. It's FMG. I always talk about this one as well. Everyone loves FMG now. It's paying a 20% dividend. Again, if you had bought this back at the tech bubble at the bottom of the GFC, that wasn't the time to buy, because then your money did nothing for 10 years. You don't want your money doing nothing for 10 years. Where you want to buy is you want to buy on accumulation, breakout, retest, boom. That's where you buy, and then you get the push up. So, because then you get triple your money and you're getting the dividend and you're getting the uptrend. You're not, anywhere in here, you're waiting a long, long time to get your breakout. So looking at that one, that's the kind of thing that we're looking for. We're looking for, okay, if this is a range, if it ever gets out above here and these sellers that have stepped in for the last, 08, for the last 15 years become buyers, then you've broken out of a big accumulation range, and then we break up. So now just going off this support zone, okay, well, is this potentially coming down to a buy zone? So looking at where we are now, okay, yep, not too bad. We've got divergence off that zone. Okay, let's go dig a bit deeper. Ooh, volume's not great there on the weekly. Bit of divergence coming off the price momentum here on the RSI. Let's go into the daily and see what that's showing.
Yeah, and a few people, have picked that up, and we look at it. So you can see the monthly OBV and the daily OBV looks quite different to the weekly.
Yeah, and that's the one downfall with the OBV is that it's a cumulative distributed total. So it totals each of these candles, like I said, the up and down volume on the red days and the green days. So, from my experience, what I have found to be the best one is the daily, because it's big enough that it can't be manipulated as such, but it's short enough that it can react quick enough as well. Because the one thing with OBV is, let's say an announcement on something comes out and it shoots through the roof. All of a sudden there's all eyes on it, and a lot of volume does step in, and it can kind of pump it out and throw it out of whack. Yeah. And it takes a little bit of time to reset itself again. So, that's why I found the daily to be the best, just off my I put more stock in the daily OBV as well. Yeah, just like the back testing of it. So looking at this one, see how it's pushed up on that. And then this has been coming down on lower volume, which is a good sign. right? So again, but again, that is just a signal. So let's just get rid of that for a sec. At the end of the day, what have we got right now? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then lower low, lower high, lower low. But then you've got a higher high here and potentially a higher low here. So this is what I'm looking for. If we can get above here, what have we then done? We've done then a higher high, a higher low, and then we've started to stop going down. We've started to then climb back up. So this zone will be crucial. We can get above here, which is what's that? Around that 222 kind of range.
Yeah, something like that.
Because then we start going from a downtrend back into an uptrend again. So yeah, that's the key zone that I'm looking for on that one to see if we see if any kind of life steps in there.
Yeah, and I think your catalyst that you're looking for, to support that move or try and get that move ready is going to be the financing. Comes through, because once that's proved up, that I guess that gives some impetus to the potential of this company to actually move forward. And can they do what they said they're going to do? Can they actually mine?
Yeah, easy. Yeah, so that one's just, and then ideally what you're doing if it breaks above there is see how people have sold. They've sold. You then want those sellers. If it breaks up, it means that the sellers they're exhausted. There's no sellers left. Okay, the supply's been eaten up. Then what you want is that to become a demand zone. So you want that resistance to become support, because what that's showing you is the flip. Okay. And that's what you're always looking for. So yeah, if then those 2.2 cent sellers become buyers, boom, you've flipped. That's it.
Yeah. All right. They're the kind of five that I guess we had. I like those because that gives us an absolute mix of everything, of where you can find, the OBV showing that really clear lead with the volume stepping out and diverging from the price, which I think is just something that's just so valuable to see. And then also, Hastings is a great example. We know the fundamentals are shaping up pretty good, but you also got to use the technicals to find your point of, where you might actually want to come back to that stock, because at the moment that sell pressure is huge.
Yeah, so this one here, see how it's like lower, low, lower high, they're going lower, lower, then all of a sudden you got equal high, equal low here, sorry.
Yeah.
So if this does break up here, prior to that change of market structure, you've also got bullish divergence. So this RSI has come down. It's a higher low compared to a double bottom. So that's what's called bullish divergence, showing weakening momentum. Volume didn't have bullish divergence. However, I do like that this buying pressure's come in straight away. So that's caught my eye, and it's already actually broken above that peak. So yeah, like it's definitely one that I would track, and I would be looking particularly at this zone here to see if the sellers get exhausted here, and then do those sellers become buyers as well. Looking at that kind of thing.
Yep. All right. Do you want to have a look at someone sent through AVL? We got time?
Yeah.
These guys are Australian vanadium. They're in Western Australia. They're looking at the mining project, the concentrator, the processing plant as well. They've got some government grants. From memory, they're fairly low on the cost curve. Let's have a look. They're really close to gas, rail, and port in WA as well. And vanadium, as we know, is about the global steel industry. Trying to help with the whole green steel revolution. Also with your vanadium batteries too, because the properties of some of those are better in some applications than your lithium batteries as well. So that's a potential, market for vanadium in the future. Your aerospace, jet engines, all that kind of stuff. That's what you're looking for vanadium. So, the demand expectations for that is apparently significant as we come into 2030. There's a few projects with vanadium starting to gain some notoriety now, but not too many of them are too far advanced. This one's still got a while to go.
So you can see, sorry. I was just going to say, you can see, this has obviously gone sideways range. It's had these kind of what's this gone from not even 1 cent? Yeah, 1 cent to 11 cents. So like a quick 11x, retraced the whole move a bit. It did have initial sell pressure, but it's starting to kind of get it. Like this last move has come up on a bit of buy volume. So I guess what I'd want to see is, because if you look, see how that's made a lower low there, lower low price, and then the volume's made actually a higher low there. So it's like, okay, well, that's come down on bullish divergence. So what I'd be looking for is, does this then go a higher high, a higher low, and then start to trend? So really I'm looking at that 4.5 cent kind of zone. Because if we get back above there, you can see this was a major support that's become resistance. It's kind of like a zone and now resistance here. It's been a zone, even if you bring it across to here, see, it's been a zone that's always been reacted to. Yeah, that'd be definitely a zone to really keep an eye on and see if we trend out of here. But it's not my ideal kind of setup that I like to watch. But if you are watching it, it's kind of neutral to me with a slight bullish potential. But yeah, it's not my kind of ideal setup that I look for.
Yeah, and there's still plenty of time frame to go on these guys as well. So you've still got potential production, I guess, 2025, but you're looking at, capex of, we're getting close to 440 mil US. You still got to put your contingency on top of that as well. You've still got to get through all the off takes. You've got to do your contracting appointments, long lead items. They've got to finish the engineering designs, final approvals for EPA, native title, all that stuff's still got to go, as far as I'm aware, with these guys. So there's still plenty of milestones to come across and plenty of risks that could actually hold this up too. So
okay. Yeah, no. So like I said, I'm not like, oh my God, we're running for the hit. Like this one has, like I said, it's kind of neutral to slightly bullish potential. And ideally we want to see it get above that zone there. That's a key zone, that's kind of 4 cent zone. And then if we get back above that 8 cents, then we start to move into an uptrend. So
this one, I guess, fundamental stage, kind of tells us that usually in this mid kind of development stage, you're going to get more sideways than anything. But you might start getting the entry of that slightly smarter money, where they're going to start building a long position and they can wait, compared to us retailers, where it's not quite the same story.
What I'd be looking for is, does it kind of like, because that happened on bullish momentum, does it now come down for a double bottom here? So, possibly that 2.5 cent zone, you'd be looking to see, does it show a bit of life off that support zone? See if it goes there. Yeah, cool. All right. What was there another one?
I got a message about BRK. Do you want to do BRK?
I haven't chatted this for ages. BRK. What's it doing? So this is when I was charted. It was doing this. All right.
Yeah. But their fundamentals are hard to beat at the end of the day. These guys just, they've ticked every box. Wells online, one after the other, well successful, paid off in incredibly quick time, making money, incredible land holding, within an area where they're surrounded by big players. And obviously the share price has been, kind of stuck for a while. And the interesting part of BRK is, because they're based in the US as an oil and gas play, they are a totally different style of company than the Australian ones we're used to. Now, the Australian style of oil and gas play is going to, do your wells and then, monetize and bring in your revenue. And then if there's M&A, there's M&A, whatever. In America, the system is totally different. In America, you've got your massive players and you've got your small explorers. And these small explorers get their land, they drill areas, they hold them by production, and they sell off to the majors. And that takes around about 7 years to 8 years is the cycle in general. And the companies sell off to the majors. Sometimes they hold an interest as well, but often they sell off and they start again. The companies don't get fully taken over. They just sell off their assets. And then they get a new bit of ground, prove it up again, 8 years later, bang, sell it off. And that's a pretty similar pattern all the way across the US industry. And some of these juniors, they even have deals with majors before they even get to that point. They're just like, yep, when we get there, we'll sell it to you, and happy days. And so it's just
okay.
done before they even get there. So these guys, when people were looking at them to perform in a similar way as an Australian one, they're not. And so what they're doing now, what they're in the process of doing now is, monetizing their assets. And that's what the market has been waiting for a while, I think, and why it's been stuck. And they started that process. They did a really good job of proving up the resource they've got and getting a way to kind of look at that volume and a potential value. What's changed and what's held this process up? But I think if you are invested in BRK, is that it's probably a good thing. The massive company that has the tenement that joins onto them has trialed a new way of drilling a well, and they call it the wine rack technique, and they're stacking. They just go bang, 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 and bang like a rack, and they've literally run this thing all the way up to the edge of the BRK tenement. Now BRK have a well drilled there, and it's doing incredibly well, but it's with the old technique. And so what BRK have done, they said, we're going to hold off until we get kind of 4 or 5 months of data from these big guys and see if this actually makes a difference. And what the data is showing is that the monetization of that resource is significantly improved by using this technique. And so BRK can say, well, this technique works. Our resource is now more valuable. And so the potential for them to sell at a better price or joint venture a better deal now exists. So that's kind of where they're sitting now. And there's a fantastic map. I don't know if I can bring it up in time. That shows exactly what this big company has done. And they have had to stop right at the edge of the BRK tenement. If they want to continue, they're actually going to have to buy BRK's asset to do that, to keep monetizing that well.
That's so the thing as soon as you mentioned this one, I've traded this one because I remember it being all plastered all over social media, and yeah. I could see, and you can see here wave 1, wave 2, wave 3, wave 4, wave 5, and going off Elliott wave, what they always go off is that you always get divergence from the 3rd to the 5th wave, because that 5th wave is your retailers wave. That is your dumb money. That is your FOMO wave. That is everyone just thinking, shit, we're going on the moon, baby. It's, it's your Bitcoin 100K by Christmas. All right.
Yeah.
So if you look at it there, and again, the divergence you often get in the volume and the thing, and, look at this sell signal that you've got on here. So you've got higher price and you've got lower in volume, and you've also got divergence on the RSI as well. So you've got bearish divergence volume, bearish divergence thing there. So the minute that it broke below that pivot low, it was 100% a get out. But even like that would worry me. The minute that I saw that candle on that and that, to me, that was like, yeah, and then also, 5 waves up, And this is what people always like, how did you know, SIA was going down and CXO were going down and LK were going down? It's because it's that same kind of thing. You see the 5 waves up, you get bearish divergence on these ones, you get a reversal candlestick, it breaks it, and then boom, it's done. And then that it's then going to correct the whole move, which means you're getting to get a big move down. And just looking at this one here, it potentially could have bottomed here, the 618, because I can count 5. Like this looks like wave A, B coming down for C now, which it could happen around here, which is the 618. Otherwise, if it doesn't hold this support, then it could come down to the fib 101, which is literally back down to where it started again. So yeah, just got to be careful. That needs to kind of hold that low. Otherwise, there's not much holding it up until it gets back down to this kind of level here, which is still pretty far away. So I guess if the FA looks good, I'd like to see whether or not that last final move, if it does get down there, starts to happen on, lower in volume, bit of divergence. If not, it could happen around here as well. So yeah, no, definitely one to keep an eye on and see how it goes.
Yeah, it's all about the monetization now. If these guys can keep the momentum on what they're doing and use that new data from the other company. Are you right if I flick over to this picture?
Mm-hmm. Yep, do it.
Yeah. If they can use it to show, yeah, that makes a huge difference. Right, let's go. All right, so you can see here. So Continental have got their pad, and you can see this line running up. So you can see all these wells are just, one at a time. One over here, you got Jewel, you got Flames. These are BRK ones. And you can see Continental, and they just nailed this new technique of running all the way along here, and they have to stop because of where they are. So the data from this is looking really, really good. The results are improving consistently, recoveries, just everything you want to see by using their new technique, all upside so far. And so if they want to keep going, they're going to have to start talking to BRK about, BRK's areas, BRK's regions, their areas that they hold, and what that's going to look like. All around BRK are, massive, massive companies. So they're in a good spot. It's just about monetization, how they're going to do it. So this bodes very well for them. I believe they're in discussions with 3 parties at the moment. It's kind of some of the information we're getting from a few people closer to the company. So yeah, if that breaks down, that's obviously going to not go well for the share price, and for that what's looking on the chart there. And if that takes another 8 months or 9 months to come through, that's probably going to spell challenges from the fundamentals. If they can pull it off in the next 3 or 4 months or so, that's probably the time frame that the market's going to give them, I would say.
Yeah, nice. I've just seen a few people say they want to see NVX and Appen. I think because I've been posting about it a little bit on things, so I'll just quickly do them before we do any more. So Appen, again, I'd done that post around that big money had been accumulating. All right, because JP Morgan had bought around that $2 something mark around. Okay, but and this is why, again, technicals are so important, because if you look, all right, for whatever reason, someone believed that it was value around that level there. All right, they believed that, what is that, $2.20? They're buying, it went up. They're buying, it went up. They came down, possible liquidity grab, went up. They're buying, and then it's kind of fallen through, became resistance, it kind of came back up. But then the minute that we got below, this kind of level, that's your major support, and your market structure goes bearish. So you can see the minute it broke below that 2, it got bearish real quick, because it's just going down, down, down. And then big red candle right now. Again, remember how I said volume so key? We need to see then, okay, is volume supporting that trend right now? All right. At the moment, it's not a lot of sell pressure, but it's enough that it's kind of being supported a little bit. All right. So, it's a little bit oversold. You might get a bit of a bounce, but yeah, it's not like when it hasn't come down on like a little bit. It's not like we're getting bullish divergence or anything yet. The thing I do like though, is that we have a triangle here, which is good, an expanded triangle. All right. Triangles only happen in either a wave B or a wave 4. So what I do like is that I do believe that we're in for the last leg. So what I'm going to be looking for is 5 waves down on this one. Then, because that's a wave 4, we're in our final leg. All right. So it does mean that we're close, and it means that I'm going to be tracking it from this point, because again, if big money's starting to accumulate, they believe that FA wise, they believe it might be something to take notice of. I'm now going to be tracking the technicals and know that that triangle happens in wave 4. We're going to have our 5th wave down, and that's what I'm going to look for. So I'm just going to be tracking it, looking for a change of market structure, and then and do that kind of thing. So yeah, that's what I'm looking at with Appen. And then
and look, fundamentally, Appen, there's never any reason fundamentally, for that, when that started getting down low, there was never any reason for that to turn fundamental wise.
That's right. It's just been bad after bad, hasn't it? Announcement.
It has. It obviously ran that massive tech wave up, and then we got the crash along with other tech stocks, because it was so significantly overvalued. So many retailers were involved in that as well. And it's one that people really want to come back, but the fundamentals haven't supported the turnaround yet. They're getting closer, but yeah, they're still not quite there yet.
All right. So this one, again, this is your typical, if you look up market psychology chart, it's pretty much this. It's a, you zoom up, boom, you drop, what's this one? Shit, can't remember the name of it now. Return to mean or something. Anyway, not return to mean. Comes out and then like it's your textbook.
Right, yeah, we've got a cool off. It'll come back. Yeah.
Yeah, that's right. Yeah, you got your cut. Oh, sorry, got the chat up here. Yeah, and then doing this, but lower low, lower high, lower low, lower high, lower low, lower high, lower low, just a lower high, lower low, lower high, lower low, lower high, lower low, equal low, equal low, equal low. So see how we've gone from downtrending to flattening out. That's, so again, you know how you do your arcs. Again, this is something I learned from the IFT as well. It's when it's kind of like starting to trend out, you always want to look for your trends that are starting to, like when they're going steep, that's a strong trend, steep, strong trend. And then see how then it's kind of like, see how this pivot is far away from this pivot, and then all of a sudden they're getting closer. That's showing that the trend is getting weaker. It's starting to kind of flatten out. That's what you look for both ways, when it's going up and when it's going down as well. So that's why for then I was like, oh, okay, we've gone from downtrending to there. So that what price is that? 90 cents. So again, for whatever reason, someone with money believes that 90 cents is why can't I find my rectangle? What am I missing? Isn't it? There it is. That zone there is, for whatever reason, someone believes whenever it got to 90 cents, bought, 90 cents, bought, 90 cents, bought, 90 cents, bought. Okay, so it is a demand zone right now. All right, so it is a demand zone until it's not. However, on top of that, you've got this zone here, which is whenever it got to there, it got sold, got through for a bit there, but then sold, and now we're kind of on it right now. So it kind of needs to push up where it is now, because these sellers need to be buyers. So again, what we're looking for is, okay, this is a sideways accumulation range. We're looking, remember, volume is key in all patterns. So then we start unpacking the volume in these ones as well. So let's go in and see what it's kind of showing. All right. So here you can see there, that made a new low and it had a higher low there. So that was showing that new low there, see how the low before that was like 91 cents. And then it got down to 88 cents there. So we made a new low in price. We didn't make a new low in volume. So that was showing volume wasn't supporting the move. On top of that, you also had bullish divergence off that low as well. All right, so bullish divergence off that thing. It shot up. What we must have now is, if that's a high, you can see shooting star. We've come out, we need to get a higher low. All right, we need to get a higher low, and then it needs to come up, and then it needs to break above this zone here. If we can get above this zone here, then you start to move from a sideways up into an uptrend. So, right, we've stopped going in a downtrend. We've started going in a sideways trend. We need to start moving into an uptrend. All right. So yeah, that's what we're looking for. So the moment it's in a sideways trend, needs to get above $1.20, $1.25, and it must hold above that, that 90 kind of cent zone. But yeah, this thing could trade sideways for a little while. So yeah, just have to keep an eye on it. But for whatever reason, someone believes its value at that 90 cent zone. It's in that, graphite
kind of battery
kind
of space
things that everyone loves. They've got like A grade quality stuff that no one's got. Let me just put this over here. Oh, sorry, wrong one over. So yeah, it's definitely one just keep an eye on. But right now it's in
Yeah.
a sideways trend. We need to see that move into an uptrend.
And I guess fundamentally, everyone's kind of waiting to see them, pull off the last few pieces of it, and then just kind of embed this down and make a go of it. All the big moves and stuff, that was all on the speculation, the hopes and dreams, and the excitement. But now it's the actual reality of how this actually happens, and the time it actually takes. So, yeah, I think sideways is the only thing that makes sense right now fundamentally.
Yeah, definitely. I saw someone go, wow, nice market AJ. I was interested to look at. And see, this one's funny as well because, well, again, this was one of the most hated stocks on the ASX. And you probably see me post about this a lot. Like, markets are designed for you guys to lose. You've got to think of it like a casino. Casinos would not exist if they didn't make money. So if they're making money, that means that majority of people that walk in a casino are losing. Okay, that's how markets work as well. Majority of people that put money on the market lose. And the reason why, it's mostly the uneducated ones. So what you've got to do is you've got to try and educate yourself, which is, you being on this call itself is testament to you wanting to educate yourself and learn a bit more. This kind of thing, no wonder why it was the most hated stock. It went from $28 down to $5, like big drop. Okay. And I always talk about when I'm looking for a reversal, I'm looking for a weakening trend happening. Okay. So again, when it started to get down, volume did not confirm a reversal. RSI did, price momentum. Okay. So we had bullish divergence happening here, double bottom here, up to bullish, off this move here. But that wasn't the thing that caught my eye because I wasn't even tracking this thing. It was the sector that I was tracking. And if you actually look at the sector, XUJ, because it's in the utilities sector.
I think this is a part of fundamentals in TA that people just forget, is that you can track a sector. You can look at the fundamentals of a sector and the macros that sit above what's going on, and then you zoom down. Then you zoom down to where you want to be.
It's what's called a top-down approach. So there's two ways of investing. You've got bottom-up approach and top-down approach. Top-down approach is where you're looking at the big picture. You're looking at macroeconomics. You're looking at trends. You're looking at, kind of the whole environment. And then you're kind of looking for what's looking hot at the moment. And then you're going with the hot money. It's kind of like if you think about being at a beach and you're going with the tide. Okay. Bottom-up approach is the opposite. You don't care. It's Warren Buffett. You don't care about what's going on in the world. You don't care if we're going into recession or depression, whatever's happening. I know my companies like the back of my hand. I know they're quality companies. Yes, there's going to be dips. They're going to go up and they're going to go down, but I know eventually they get there. I know their trajectory is up eventually. That's something like your Coca-Cola. It's something that no matter what, people are going to use it. They're going to buy it. They're going to drink it. And, that's the kind of thing that you're looking for. And that's Warren Buffett. He's that bottom-up approach. He doesn't care about cycles or anything like that. He's not trying to just make money for a couple of years. He's looking for things for the long term. So this thing here, utilities, when I get, again, trending down, and then it came down. Remember how I said for every move, you retrace 1/3 to 2/3 of the move. Came down to the 618 that got in ratio 2:2. And then when it got down there, it had perfect Wyckoff accumulation, and I've got these exact posts on the date that it was happening on Facebook and stuff, talking about this being accumulation. There's your spring coming up. And this date here, see how then, let me get rid of this zone here. Downtrend, sideways trend. And then see how then we move from sideways back to an uptrend again. So that date there, when it broke out, see how it's the 7th of December? That's when I'm like, oh, the utility sector is showing strength. So then you start looking at, let's look at some of the utility stocks. And that's why then I started going, AGL, let's look at what that's showing me. And if you look at that date, 7th of December, where is it? It is here. All right. So then I'm like, oh, look at that. We've got a higher high, a higher low, a higher high. We've changed market structure. Prior to that, I can see that I've got a weakening trend coming down there. So that's how I then got my entry at my $5.30 for AGL. And then that's it. I had my stop below that swing low. It never got hit. And then now, if you look at it, what is it? $5, and it's gone up to, whatever it is up here kind of thing. So, that's the kind of thing, that's what's called top-down approach, where you can look at the big picture and you dive down and find something that might potentially be bottoming or breaking out off that kind of zone.
Yeah, looks good. And AGL is having its pullback at the moment. What they've released for their expectations, in the coming year or so, actually looks quite good. But I also think, we've got other forces on the market too that are going to be at play, and the TA, might be starting to show some of that too.
Yeah, exactly right. And what does it come back to? Again, look at the TA. Major support has become. See how this was buyers become sellers. It's just a support resistance flip right now. So, if you knew your TA, you would have known that kind of thing. Okay, well, where's a point where I could possibly take some profit? It's going to be that zone.
Yeah. No, that's fantastic. I think we've gone for a bit now.
Yeah, let's
leave it there.
Yeah, let's end it there, definitely. And if you guys enjoyed it, guys, let us know. And possibly, Craig, maybe we can do another one.
Yeah, mate, that'd be
one
good.
Day, yeah.
That'll be good. And you've got your training for 40 days coming up?
Yeah, so I'm looking at doing it on I think probably around November, I think is my best time, because then I thought if I do November, it'll go towards that early December. And for me personally, I hit 40 and I was like, okay, I want to kind of give back to people. And for me, I lost my father to suicide. So depression and that kind of thing is something, mental health is a thing that hits home for me. So it was kind of like a way of giving back to that. And I just thought donation, do it from there. And and
good call, mate. I love it.
What about yourself?
We've got the fundamental analysis training coming up. Starts in about a week. And
okay.
So, huge focus on the resource area, huge focus on the biotech area to really try and break apart these companies and see how they move in their cycles. But what you should be seeing in the cycles to give you a guide of your catalysts, your entries and exits, and what you're really looking for and what makes the company tick. And so, same thing, more odds in your favor, and you line that up with TA for significant strength. I have a few questions on the FA course. Look, there's the link to the Reverse 360 website there that we posted. If you're in the ASX Share Trading for Beginners Facebook page, it's pinned at the top as well. But I can post another link there tomorrow with a link to the FA training as well. Thanks, Gavin. Yeah, I love it, mate. It's my favorite part. I'm in a barrel the whole night. It's pretty sick. Love y'all, mate. I'd love to. So guys, if you want to jump in the FA train, that'd be amazing. It runs for 4 weeks. We do 2 live sessions a week. You've got eight pre-recorded modules. You jump on the Discord as well for a chat to practice everything. So it's always good fun. I love doing it. So that's what we've got next. Starts in about a week.
Oh, legend. Cool.
Awesome, mate. All right. Thank you so much, mate, for jumping on. And we'll talk about another one in the future.
All right, buddy. Catch you, mate.
Take care. Thanks, everybody. Appreciate it.
Thanks, guys.
Bye, everyone.